Okay. Okay. We're gonna let this thing marinate and see who comes in. Respect to everybody that's coming in and all the people that's either focused on the markets or looking at what's their next plan and agenda. But this is a open business panel for anybody who wants to come up. Feel free to come up. The link is in the chat. Super Triz, respect to you. Link is in the chat. Respect to everybody that's coming in. Man, respect to you, Nash. Man, there's a lot of movement going on. You got Elon Musk pretty much bought Bitcoin a month ago, now being reported to the media, and pretty much he done won a pump and dump method due to the fact he did it a month ago. He already bought his position, and you see he done messed around, probably make that 1.5 billion to 5 billion. Troy, respect to you. This is open panel, Troy. Open panel. So anybody wants to come up, come up. We're going to talk about North Carolina real estate due to the fact that there's a lot of New York people moving down to North Carolina. And there's been New York people that, from my client base and people that I know personally, that says that North Carolina is about to be either close to a million or going to be right at a million mark this year due to the fact that the influx of people that's coming in. But the open panel link is right there. But open panel link is right there. Anybody wants to join in, feel free. Feel free to join in. We can chop it up about some business stuff. Let the room marinate. Respect everybody. Like, share, subscribe. And if you want to be able to chime in, you can be able to chime in as well. Okay, let me share my screen. Let me share my screen. Okay. First, we're gonna look at the stock market stuff first. Most of the stuff has been done in pre-trading. Okay. So the candlestick went red and it's consolidating sideways. Nasdaq green. So that's up. That's up. Technology is somewhat green. Consumer red. Communications green. Financial all red. Matter of fact, I only see like two or three sub niches in financial that's even green. Industrial is red. Utilities green. Real estate green. Let me look at the real estate. Let me look at what's going on with this real estate green bubble right here. But for all the people that's coming in, we'll just be able to get a little look on what's going on with this market. Hold on. Wow, this literally glitched me out and everything. I'm trying to. Pardon me for the technical difficulties. I don't see what is going on here. That's very weird. It's very weird. Give me a good second. I don't know what's wrong with FinViz website. That website has been acting wonky. So let me go to Yahoo Finance to look at the market. Let me go on Yahoo Finance. Get on Yahoo Finance so we can be able to see what's going with the early day of the market. Most of the trades went on pre-market. Most of the people that's pretty much entered in, they got all their trading done in the pre-market. So usually the stock market start off red in certain aspects, but it seemed like the green is real estate, and that's mostly real estate ETFs. So those are literally the big corporations that are setting aside monies when it comes to that niche. Plus, you got a lot of real estate people like Grant Cardone said that they did take a hike uh, in March of 2020, but pretty much rebounded. So I don't know if we're going to even have a drop in real estate equities. They're saying that there's supposed to be a big plunge. Other people said it's going to be a big run up. With things opening back up, commercial real estate can somewhat get a breather, but a lot of them has a lot of debt on them. So there's probably going to be a lot of companies and corporations that's going to have to file bankruptcy anyway. So when it comes to the grand scale of the market, a lot of people have ETF situations that's stable. Other people figure out who is the mega corporations that either own a lot of real estate or just have a lot of assets in general. BlackRock is a stock that's, I believe, $3. I can share my screen. We can be able to analyze this, but it's around $3.30 at its highest. It was like $10 at its highest. So it's definitely undervalued when it comes to the aspect that they're still buying companies and corporations. Hell, they're buying a lot of penny stock companies by themselves. So the corporate investment price is around $3, but this specifically can be something that's involved of stability, and you can be able to capitalize off of corporations and companies making acquisitions, making buy plays. Let me get the corporate one. The corporate stock. Corporate stock is around $3.30. So let me get this shit so y'all can be able to read on this specifically. But for all the people that's coming in, this is open panel. If you want to be able to join in and chime in, we can be able to figure out. Okay, the ticketer is BKCC. That's pretty much for something that we're gonna look at right now. So give me a good moment. Okay. BlackRock Capital Investment Corp, $3.30 actually. So this is definitely undervalued compared to what it's actually worth compared to its actual stocks involving in other corporations and companies. So at its height, $5, and at its drop pre actual COVID from pre-COVID, it took a known plunge around $1.15, consolidated. From this consolidation, dipped, consolidated, and dipped lower, then had a jump increase from around election day. So from around election day to current day, it's pretty much been up around, let me get it correctly so y'all can see. Okay. A 33% increase. So from election day to now, it's been a 33% increase. So it's literally on the upward bound. It's affordable. And we're going to look at another stock that I had in mind. Okay, so it actually jumped here recently. So let me give y'all some of the news. What it is: headquarters in New York, New York, founded in 06. Subsidiaries. So these are the companies that they own. From the bottom, They're probably private subsidiaries, so they pretty much go by of acquisitions, buyout companies, leverage buyout, where they can be able to use debt to buy other companies and corporations. And let me look at the 5 year. Now its 5 year height is around 10. Right now it's at 3. And from November, it has increased 33%. So it literally, I would figure out on what's the active balance sheets when it comes to that specific stock. But BlackRock own a lot of real estate. They have, I believe, around 6 trillion global assets on the books and probably $1.2 trillion in corporate assets. But they're not the biggest developers. So when it comes to the aspect of real estate, there's a lot of mega corporations that's either putting money on either developing ground up, or as they would call it, gentrification, pretty much sweeping a whole subdivision and buying like around 100 plus assets in that neighborhood and pretty much reshifting, and development follows around that 120 assets that was bought by a company corporation. So when it comes to figuring out areas of who buys what, 13F quarter filings is pretty much where the SEC people has to be able to figure out what are you doing, what are you doing, what are you buying. You got to report it. If you have over $100 million in assets, you got to report it. And that's how really people figured out what Elon bought, but they was too late. It's literally too late to let the media tell them about it, and that's literally the jump of Bitcoin going on now. So Bitcoin has literally risen to 46,000 a coin. 46,000, and they're saying 50,000 is definitely looming near. When it comes to the crypto situation, it has to be you figuring out what is a possible solution for you to either do a fixed cost dollar averaging, where you're setting aside $50, $100 into something that you feel comfortable, no matter it's crypto, stock, or just silver in general. Those three pretty much commodities can be done over time. And with silver, the beautiful thing about it is this stuff is literally all legal. Crypto is legal, but it has its restrictions due to the fact that there's a lot of power players, mega corporations, Mark Cuban, Damon John. So the people from Shark Tank, they was pretty much saying that, oh, I'm not for it. Pretty much get you away from it so you don't pump up the market, so they can be able to buy their positions, stack hundreds of millions of dollars into cryptos, and pretty much say, okay, now I get my approval. Because these people go on CNBC, Fox Business News. They pretty much have a lot of influence. A lot of people listen to them, and a lot of people invest and try to follow the wave of a J.P. Morgan or a Warren Buffett, Mark Cuban, and other people like that. So it's pretty much you just finding the money. Finding the money and be able to either, how can I put it, either understand what's going on with their reinvestment model, because a lot of them have this stuff online. A lot of people don't take the time to be able to research it. A lot of the stuff when it comes to their financial modeling, are they trying to do expansive global investments, where they're trying to be able to capture emerging markets, as they would say, markets that's literally on the rise. You have a lot of investors. Elon Musk is in Africa. You got Russian and Chinese investors as well, pretty much doing deals in Africa and getting into Africa and literally the biggest ground floor. Briscoe, respect to you. Can you do something on mutual funds and ETFs, please? Well, I just literally, I don't know if you just came in, but I did have a mention about ETFs, real estate ETFs and oil and gas ETFs. Matter of fact, we can look at ETFs right now. Let me get on Yahoo Finance real quick. But yeah, I pretty much mentioned about that tech ETFs. Tech ETFs is going to rise to the fact that tech makes money off of advertisement placement. So people that need Facebook ads, like I utilize for my e-commerce stores, and Google ads, like I use for my e-commerce stores as well, that's gonna pretty much gonna be the rise. A lot of people's gonna shell in a lot of money on advertisement, getting them placement ads, setting up product stores, probably getting everything niched down to a T. So let me do this. Okay. Now there's one oil and gas that's literally extremely cheap and it's over the counter stock, so you're gonna have to get a broker that pretty much spons sponsors and okays over the table, but it's Gush, Gush, and it's oil and gas. Definitely something to be able to research on. Due to the fact that it's extremely cheap and oil and gas is definitely gonna make a comeback because the demand is gonna be back where things open up. People are gonna need oil and gas to be able to get to point A to point B. Certain things are gonna be easier on Zoom and StreamYards and stuff involving tech. How can I put it? Communication tech. So, but a lot of the stuff involving with airlines and JetBlue, pretty much anything involving ETF is pretty much a combination of the industry. So they literally take the top specific industries needed, and they pretty much capitalize and put it into a specific portfolio and necessary needs. So with Direxion Daily SP Oil and Gas Exploration and Production Bull 2X shares. Now this is $58, and this is at extreme discount compared to what it was pre-COVID before oil and gas start start crumbling. If anybody wants to come up, they can be able to come up and ask any questions, so we can be able to chop this one up. Okay. Okay. Now this is Gush. Gush is involving oil and gas exploration, as we can see up here. And this is for when the bull market is running. This is when it's a bull market. This is the bull, and you have the bear, where the bull back in 2015 was $72,000 a share. Then you see how it plunged downward to 24,000, then plunged even more downward, where the estimated ratio number has literally sunk to this number as we see right here. And at its lowest, it was at $21, $21 to $28. I'm trying to pin it down. No, it was at its lowest $15 at its lowest, $15.01. Now it's at $58. So that's literally, if somebody put 150, they literally would get back around $600. So really, when you do things like this, you're expecting for it to go up, where the demand power surge is bull is up, bear is down. For a lot of people that's getting into stocks. So this would be an this would be considered an ETF. This would be considered an ETF. Now, what is your comfort zone when it comes to ETFs? What specifically that you look for into your investment model? Do you want something that's stable? Do you want a dividend? Do you want something to just buy and hold that is actually cheap by comparison? And my prediction and my move on MGM actually paid off. MGM is now as high as it was pre-COVID. So people that bought into it, that got my stocks list, is pretty much happy as well. Due to the fact everything managed to increase up, more demand is surging. Disney is going to be up due to the fact that they're going to do more production, and they need to catch up with a lot of production stuff that wasn't released last year in 2020. So with them doing the catch up, it's definitely going to be a power play to be able to look forward to. So these securities is definitely not something that you really want to hold without having a entry plan, so you know how to enter, and an exit plan, so you can be able to figure out, okay, this is my profit, this is what I take home. And if I want to be able to reinvest it in certain things, we can be able to do that as well. So when it comes to dividends, always figure out dividends. Well, a broker that will allow you to reinvest your dividend yields. So when you reinvest it, that's compound interest, and that's literally how you compact and compound to be able to grow it larger over time. And plus, it's better for you when it comes to tax purposes, because short term, short gains is uh, is higher than long term. So when it comes to your proper dividends research, always figure out, is the company stable? Is the balance sheet actually stable? Are they a financially um, healthy team? Do they have a good management? And we're going to look at Jones Coca-Cola, because Jones Coca-Cola is another stock that's actually really cheap. It's actually 42 cents, and it's extremely undervalued. My prediction is like $2 or $3. So I'm going to literally buy $50 into that monthly, and hopefully every $50 that I bring in can be $200 back, due to the fact it can go from 43 cents to $2. Plus, they got a mega corporation setting aside some money. So we're going to share my screen real quick. Now, when it comes to investing in real estate, the way how I did it and the way how I still do it is wholesale real estate. So I'm marketing to people of We Buy Houses. So, Black, you would be a marketer of Facebook ads in areas in your city. Now, I don't know which market you're in. If you can tell me the market, I can be able to give you a good scenario. But when it comes to wholesale real estate, you're pretty much making a marketing scheme of We Buy Houses, where we can be able to give you a cash offer. And what you do is, you, as the middleman, lock up the contract with a purchase agreement, and you put on the contract that it's an or assignee, meaning that you can legally be able to assign it, and you have your earnest money deposit, so you can be able to lock it up and it's legally binding. So what you do is, you be able to make sure that either you got a developer that can be the cash buyer, or you can use platforms like Bigger Pockets to be able to network with people in that area, to be able to find a private money lender, cash buyer, somebody that can be able to do it as well. And say if you're in a state that you can't be able to sign it, where it's a non-assignable contract, you would do transactional funding. And that transactional funding would be something where you can be able to utilize short-term loan to be able to close the deal with the cash buyer and assign it to the developer, and pretty much make a money off of a wedge instead of assigning it for a fee. So, BlackRock, if you're in the East Coast market, say if you're in New Jersey, you can be able to find something in South Jersey, Berlin, something for $40,000. But if a developer put 40 into it, they can be able to sell it for 180 to 220. Then pretty much you done found something where it's undervalued by you marketing it on Facebook. We buy houses, we buy cash, and as is deals. That's how you can be able to utilize a lot of people in those areas that need to be able to get rid of their house, and also be able to assist the developer on a project. And a lot of developers will do consistent business due to the fact that they need more assets to be able to find, and they don't have the time to be able to bird dog properties. So really, it's bird dogging method. A lot of people have another method of virtual wholesaling, of pretty much getting tax records and going to the tax county assessor and getting all the information gathered and needed to be able to assess and generate enough data. A lot of people do postcards, a lot of people do email, phone number, but you would also be able to have to figure out if this is an absentee owner where they don't live in that house or live out of state. You have to be able to figure out who is this person, or who is this person's representative. And usually the tax records and everything on the files, on the books, can be able to figure out who is who and get you the information you need to be able to reach out and say, I have a cash offer for your house. If it's in a war zone, heart of the hood, you can be able to utilize of the fact that there is going to be either uh, not a mega corporation developer, but it's going to be like a small time contractor that pretty much need houses to be able to fix and flip. Another good YouTuber that I would like to recommend when it comes to certain stuff, when it comes to developing in hood areas, would be Man, his name was literally off the top of my tongue, but he was on Earn Your Leisure, and he pretty much, if you search Earn Your Leisure, how to make money off of fix and flip, you can be able to find him as well. Um, I'm trying to remember his name because he actually provides good value when it comes to fixing and flipping. He does his stuff in Philadelphia, New Jersey area, VA, and he expand his markets, and he pretty much figure out how can he be able to get these properties for cheap. So that type of marketing, you probably seen the We Buy Houses market. We Buy Houses marketing to you on TV or Facebook or something visibly known. Okay. Respect to you. Salute to you as well. Salute to you as well. Yes, wholesale real estate. So entering into wholesale real estate, you can be able to have, if you set aside $2,000 to $3,000 for your marketing, earnest money deposit, and to be able to do that as well. And with negotiating, the closing costs would have to be deemed from your cash buyers. So literally, you would have to take your cash buyers pool of money and be able to use the difference to be able to cover that as well. So literally, you're just using other people's money to close the deal, and you locking up the contract and having a contingency for 30 to 45 days. Um, and you can also put fast closing, but that's if you have a guaranteed cash buyer. Say, like what I do is I go to a city area and I'll have to figure out who is the developer here, get on the phone with the owner, try to figure out what he wants, try to assess what everything he needs, pretty much writing things down, sizing him up to be able to figure out how can I be able to position myself correctly. How can I be able to position myself correctly in order to be able to suit his needs and to be able to make money on a wedge? So it's literally making money on sandwich deals or wedging. Okay, hi, new subby suggestion. A farm list for off-market properties from a title company. Are you a title company or do you use title companies? If you do, that's pretty much a good partnership right there because title companies is a good useful asset because they got a lot of information. They got a lot of information. Oh, MG, the mortgage guy, he's another good one. He's another good one. He's another good one. He's another good one. Uh, Planterra Properties, come up. Click the link, man. Click the link. Click the link. We can be able to talk and chime in about real estate in these areas because a lot of development is going to be running through. A lot of people moving from California into multiple states. A lot of people from New York moving in from a couple of states, and a lot of international investors is moving to Miami areas as well. And Miami developers, they got another dilemma where they're pretty much moving inland. So Port St. Lucie is going to have developments. Apalaka is going to have developments in other areas when it comes to Miami, Florida, where Kodak Black, the rapper, lives, is going to be developed. Um, Houston in the Third Ward, they're talking about either some future developments. So where Jay Prince is at, more development. Areas of Snoop Dogg in Long Beach, they're doing developments around the 20s area over in Long Beach, California. So there's a lot of areas being developed at once. Detroit properties is rising. You have Angela Yee, her annoying ass on the Breakfast Club, pretty much waving her hand in happiness and joyful and glee due to the fact that the properties that she put in 2012, 2013 is starting to rise. So she put 6,000. Now she says that the properties is around 40 to 50,000. So people that said that, well, I ain't gonna do that, and I ain't gonna do that. Pretty much, it's a long hold, long buy, build, and hold. So getting rents, cash on cash returns, that's on a good positive streak is pretty much needed. But it's an open business panel. If you want to be able to click the link, definitely click the link. We could be able to talk about certain things. But with wholesale real estate, the beautiful part about it is if you can get a system and get a call center of teams to be able to train them how to be able to get on phone with the buyers, how to be able to make offers, how to be able to do that and have a system plugged in, that's literally one of the most amazing things you could possibly do. That's literally one of the best things that you could possibly do. And into appointment, like to contact with you for more. Well, my email, Planterra Properties. My email is right here, and it's also in the chat. So if you want to be able to get in contact with me, you can definitely email with me, and we could be able to correspond that way. So let me type in my email in the chat. For all the people that's coming in, open panel discussion. So let me share my screen. Let me share my screen so we can be able to get some visuals. So that's my email. That's my email right there. So if you want to be able to get in contact with me, you can be able to talk and have certain discussions when it comes to this. Yeah, because there's different methods to do everything. You know, there's different multiple ways how to skin a cat. So let's figure out. Okay. Charlotte, North Carolina, Barclay Downs. And I'm also going to do LoopNet as well. I'm going to also look into LoopNet to be able to see on the commercial side. So let's get a glance on what's the median price averages. These equities is kind of high now. Rittenhouse Circle, those properties was around 275 like 5 years ago. Now they then got up, so 268, 350. Okay, I got a 1.2 in Honors Court, so that must be gated community area. Millsbury Court, Sylvan Ave. Let me find out properties in the heart of Charlotte. These properties is probably going to be like $1 million easily due to the fact that a more influx of people, there's going to be even more rush of people that's going to want to live there. You're going to have an instance of need for more corporations and businesses due to the fact that it's a banking center. Certain tech companies is going there. Certain call center companies is going there as well. You got a lot of Californians, a lot of New Yorkers, a lot of people from New Jersey, VA. And even VA has gotten expensive. Even VA has gotten expensive itself. Plus, the VA is not very tax friendly. But let's look at this house for $550. Oh, well, I think I clicked on the wrong thing. Yeah, I think I clicked on the wrong thing because I think this is about 865,000. Yeah, I clicked on the wrong thing. Or did I? What's the property price? Okay, so this was built in 1999. Estimated payment $16.23 a month. Price per square feet $286. The HOA is $237. So this is HOA property. Okay, so the HOAs definitely have to be encountered. So that would be like around $2,000 a month for this situation right here. Oh, this is for 320. Okay, 322, 2 bedroom, 2 bath. I'll try to see if I can get it for 275, 260. Well, I would start off the negotiation at 270. I would literally start off the negotiation at 270 and see how I can be able to still save while still getting an agreement going. I swear this website loads too slow. Let me look at the chat. Okay, my man Super Triz. Yo, Super Triz.
Yo, what's going on?
What's going on, man?
Not much.
Okay. Now, have you been to Charlotte?
No, I've never been to North
Not in the
Carolina. Period.
military? Okay, okay.
No. Yeah, but I'm not too familiar with Charlotte, but I do know that the Raleigh and Durham area of North Carolina is experiencing some growth because of the diversity of the economy there.
Hmm.
Obviously, Charlotte is like one of the like the major city in North Carolina, has an NBA team and things like that. But that doesn't necessarily mean that there's growth there to the degree that, say, Raleigh Durham is experiencing. So there may already be an established market, in Charlotte. So depending on what you're trying to do with your money, are you trying to just park your money, or are you really trying to grow your money? And so I don't know if you
It
have
would
to
be
look at.
parking. It would be parking.
Yeah, so
It,
yeah,
it, it
Charlotte
would be a
maybe.
parking move.
Yeah,
Okay, so
Charlotte
I
may
don't know if
be a
it's in
safer
Raleigh.
bet.
So let me research Raleigh real quick.
Because
Let's
really,
research.
because really, you want to look at not the current value, but you got to look at the value trajectory. So look at the past trends, and then what it is today, and then what is anticipated to be. And then you may see that the Raleigh Durham may have a higher growth yield than, say, a Charlotte. Um, I mean, but real estate, generally speaking, in most markets, real estate is appreciating. There are a few exceptions, obviously, but most markets, real estate is appreciation. Just some are going faster than others.
Okay, let me type this in. Riley. Oh man, I did misspelled the hell out of Riley. Okay, this. Okay, let me. Okay, okay. Let me share my screen so we can be able to look at this. Let me take the banner off. Hold on. Take this banner off. Okay. Okay, so the average median price is 315,000 in Riley, so that's lower compared to what Charlotte had. Charlotte had around 450,000
Mm-hmm.
on its last listing, so well, on its last data numbers. So this is a 349, two bedroom, one bath, 924 square foot with a 7,841 square foot lot. So,
So I guess the question would then become, if you had, let's just say you had $500,000 to invest,
mm,
whether it be maybe be a cash investment, or I mean, most likely you're going to be getting a loan of some sort. So let's just say out of that 500,000, maybe you have 100,000, 100,000 to invest. So the $100,000 will yield you a property worth $500,000 with a conventional 20% down payment loan. So with that being said, I'm just using these numbers,
mm,
roughly, but in, let's say, 2 years, that $100,000 would be equivalent of what in Durham versus what in Charlotte after 2 years have elapsed. So you may look at it and you say, well, the property values are cheaper in Raleigh, but what is the growth year over year, of a particular market? And they really and truly, looking at a city itself is not as accurate as looking at sub markets within that city. So if you can narrow it down, and I'm not saying you're doing that now, but just like when you really want to get serious about a particular area, you got to look at the sub markets, look at neighborhood by neighborhood, because different neighborhoods that have different projected growths, even within, one individual city. So I guess the point I'm trying to make is that some people look at areas and they may say, oh, well, let's just say New York. New York, people are fleeing New York, and and this is what the media, tells you. But as a whole, there may be some depreciation in actual rental revenue. But if you look at a particular submarket, there may be certain neighborhoods in New York, or let's just say Pennsylvania, right? Pennsylvania is not looked at as a high growth, high yield market as far as real estate is concerned. But if you have boots on the ground and uh, that particulars about specific neighborhoods per se, then that's where the actual uh, gem is at. Because if you have a fervor, like right now, the fervor is in Austin and in San Antonio, because you have people who are fleeing California, fleeing New York, and they're relocating to areas like in San Antonio, Austin, to a certain extent Phoenix. But now you have a high level of demand. The supply is still low. You have a lot of competition. Prices are people are paying more than what they should be paying because of that level of competition. Whereas you look at an area where people aren't really looking. So there may be a state, people they're not really paying attention to that state because they look at the overall growth of that particular state, and it doesn't look as appealing. But you, as the savvy investor, are going to look at those states where people aren't looking. You're going to look at those states where there's less competition, but then you're going to look at that sub market in that state and say, okay, well, let's just throw a state out there. Pennsylvania isn't doing that good,
Well,
right?
well, I call it Pennsylvania. I call it
Yeah.
Pennsylvania.
So Pennsylvania, Pennsylvania may not be doing that good, but then you look at a particular neighborhood of a city, and you find that this particular neighborhood is doing exceedingly well. It's a high growth area, is experiencing a turnaround. That's where you want to look, because all you have to compete with is local investors, because from a national scale, national investors aren't looking at that area. Whereas Austin,
No,
San Antonio, all eyes are over there. A lot of competition over there.
gotcha. Gotcha. Now, what do you think about this situation? Now, this is a six bedroom, six bathroom, 260 situation. Off the visual, we ain't necessarily number crunched the situation yet, but I was looking at this.
Well, I mean, you look at obviously landscaping. There's some value add to be there. Is the interior, um, there's value add to be had in the interior. But the question that becomes is, how does that particular home rank against the other homes in that neighborhood? Is that the largest home? Because you
I
said
think this
six.
is the largest. I think this is the largest.
So generally speaking, unless you're coming in way under market, larger homes you typically want to avoid in the neighborhood. You want to find one of the smaller homes or one of the less expensive homes in a neighborhood, because there's more room to grow. Like if you look at the actual, like after renovation value of that home, you see what I'm saying? What is the max that you can expect in that neighborhood? Because somebody may say, well, okay, let's just say the home is how much is that house again?
260.
Okay, 260, right? And you say, okay, 260, I'll dump another 60 into the home. Uh, I'll renovate the kitchen, probably replace the countertop, paint over the cabinets, paint the cabinets white,
260 with
luxury
an
vinyl.
860 mortgage. The mortgage
You
is
say what?
860. The mortgage would be 860 estimated a month.
Well, does that include property taxes? Because a lot of times that's principal and interest only when you
Okay.
look at those mortgage estimates. So you
Okay.
got you
You see,
got
they
you
don't
got
they don't crunch it down like that. So I'm gonna have to do some more research because these areas I'm definitely gonna do some due diligence and bring back some information back to the campfire, because this is definitely something that I want to try to see if I can either start off the negotiation at 215 and see where how I can be able to go from there to 205, 215 around that area to be able to start off the negotiation. I try to see what, say if you and me was involved in this, see what we can be able to figure out on this situation when it comes to this, because this I want to be able to rent most of the bedrooms off for at least 750 each to a G each to a G a piece at least.
Well, I think a thousand for sublet is that's a steep ask, and 750 even in Seattle, with exorbitantly high real estate prices, 750 it's doable, but beyond that, you're really you know shoveling uphill. But I would say, when you're trying to go so far below asking, when you say, the it's listed at 260, and you wanting to offer 215.
Yeah, just to
Now,
start the negotiation, because we know we don't start at 260.
well, I mean, here's the thing though, when you're coming that far below asking,
Mm.
unless you're like an all cash buyer and you're able to close quickly, they're able to get the money quickly.
What, a two
Um,
3 week close?
huh?
2 to 3 week close.
Yeah, but because you have to have something appealing about your offer, because they list that 260 because that's obviously what they want to get, 260 or higher. Maybe they'll accept less than 260, but that's the kind of the ballpark that they want. So you're coming in under 215. There has to be a reason why they would actually entertain your offer. Well, I'm offering 215 because I'm paying cash and it'll close quickly. You see what I'm saying? And I'm waiving contingencies.
Mm.
I'm providing my own inspection, and I'm paying the closing costs. That would be an appealing offer at 215 potentially, versus 215. I got a FHA loan, and
Yeah, we ain't gonna do
yeah,
nah.
so so yeah,
I get what you mean, dog. But
yeah.
try to steal at least some equity off of it. It may not appraise for 260 because a lot of these agents be telling people to be listing it way overpriced.
Well, and that's what you look for. You really want to look for a house that's kind of a distressed sale. Like if you're looking at the MLS, right? The MLS, you're generally not going to get the best values out of the MLS listings, because these are a lot of the good deals are off market deals, and they're
The
and
We
they're
Buy
through a
Houses.
network. Yeah, or like a network that you've established, and then you get access to those deals. But like once they reach MLS, then you want to look at homes like that have languished on the market. Perhaps they were overpriced. They're generally speaking, what happened is the price is high, in comparison to what is actually being offered. And so those houses stay on the market for a long time, and then at that point, that's when you come in and say, okay, listen, we can make a deal now, because this house is obviously not selling, is not appealing at that price.
Copy. Okay. North Carolina businesses for sale. Okay. Now let's see what's in the business niche to be able to figure out, these listings. Because really, try to see what's involved with the real estate, residential, commercial, plus the businesses for sale. So, these, even though really you gotta have to be connected when it comes to this too. You gotta have to know a business broker by yourself. A business broker is somebody that's connected when it comes to that market to be able to get you deals and figure out what's for listing price. Tile and remodeling products 1.7 with a cash flow of 475,870 a year. Okay. This is operated business provide homeowners and commercial clients a vast selection of title and remodeling products for their houses.
That,
Can
remodeling businesses, that those businesses, those there will always be business for remodeling businesses.
okay, so let me click on this one.
That's like something like where, you know, yeah.
1.7. So let me do the math real quick. 1.725. Mm, say if we can get 20% down payment, 345 compared to the 475, and the gross revenues is 4.6 million. They didn't give us the EBITDA. The inventory is 500,000, established in 2001, and the equipment is at zero. They didn't. I don't know if they didn't. Yeah, they didn't even add this. Great cash flow. Owner ready to retire. This is a locally operated business. Provide homeowners and commercial clients a vast selection of title remodeling products for the kitchen, bath, and outdoors with a superior service and a beautiful shower room. Clients from Riley and the Research Triangle Park areas and beyond have loyal working with this showroom for years. SBA pre-screen for qualified buyers. Okay, inventory included in asking price. Okay, so that's included. Asking price, employees 11, facilities. The business is located in an industrial building built in 2000, street frontage. Plenty of dedicated parking space are sufficient for staff and customers. The business owner owns the warehouse and facilities and will negotiate market rent with the buyer. Let me repeat that again. The business owner owns the warehouse and facilities and will negotiate and market rent with the buyer. The competition, like most metropolitan areas, there are several competitors, both national title showrooms and regional operators, but few match the breadth and depth and high quality offerings, available inventory, readily available products, design assistance, and a knowledgeable staff, and exclusive product lines as the business owner. Growth and expansion. There are several opportunities for growth for this business that the owner will discuss in greater detail at an appropriate time. Support and training. The seller will work with new owner to train and prepare new ownership for an agreeable period of time. The seller will agree not to compete for 3 years within a 50-mile radius. Let me highlight that. There's a lot of highlightables when it comes to this. The seller will agree not to compete for 3 years within a 50-mile radius. Hmm. Okay. Reason for selling, retirement. But yo, it says here that the seller will not compete for a 3 year span. Hmm. Well, the reason for that business of retiring, well, definitely going to have to definitely ask the person with the opportune time, but still, uh, 1.725, 475,000 in net cash flow. The inventory is there. It's included in the asking price. uh, Scenarios like that is definitely try to be able to figure out what's the prime opportunity on how to negotiate something downward. But remodeling, like you said, is definitely a strong niche because everybody's gonna need their house remodeled. So they got that business for sale. The next business is a extremely profitable, self-performing site wall construction company. The company is performing commercial property construction. Okay, non-sub contracted by 16 crews due to January 2021. The revenues deprived approximately 10%. I don't know. What about this one? This one is like 89,000. This is like 90,000 with a cash flow of 50,000. We definitely got to do the research on this. That's too high. Oh, what? I didn't click on the wrong thing. I clicked on the construction company. Hold on. Wait a minute. This construction company, 17 million in gross, 3 million, 3.9 in EBITDA. Ugh. Then the furniture and fixtures and equipment is 182,000, and the real estate 130,000. Okay. The company is a self-performing commercial specialty construction firm. All work is performed in-house, not subcontracted by a crew of 16. Due of January 2021, the revenues deprived of approximately 10% government municipal, 10% institutional, 40% commercial to developers, 40% residential to developers, and 0% of homeowners. So I guess this is literally the breakdown of all where the revenues come from: 10% government, 10% institutional, 10% commercial to developers, 40% residential to developers. The company is focused on value engineering the whole entire work site, which provides a competitive advantage. Unlike many construction companies, this company chooses to rent its construction equipment, which provides flexibility in transfer, maintenance, relocation, storage, and insurance responsibility to rental firm. The expense format copier, no, copier, scanner, fax, and e-size color plotter scanner will be transferred to buyer and are not included. Okay, so this is not included into the furniture expenses. Well, furniture and equipment. The company averages 1.5 to 2 million of open WIP, 2.5 to 3 million of awarded contracts not yet begun, and 2.5 to 3 million in outstanding pending bid proposals. The approximate required working capital is 400,000. The bonding projects is represented approximately 2% of gross revenue. EBITDA is estimated assuming two executive salaries of $150,000 each. The price in asking price is database sorting purposes only. Seller expectations are based on a multiple of earnings. The owner has the owner have worked in the industry for approximately 20 years. The company has grown consistently since its inception. First year revenues was 90,000 with year-over-year increases annually through 2020 approaches 18 million with a 17.8% in average annual top line revenue growth. Okay, so the real estate is owned, but not included in asking price. So literally, we have to buy this plus the real estate, building square feet, 850, 75 employees, included in asking price. Facility operates in a location on a major thoroughfare in Wake County. Adequate parking is available. The building is available for purchase. If purchased, the property will be sold at bank's actual appraised value, which may be higher or lower than the estimated 130,000. Hmm. Okay. This they got a lot of jargon up in this thing.
Well, I mean, the actual the $130,000 building is probably going to be a drop in the bucket compared to the cost of the business itself.
Yeah, that's
Yeah,
a
because
$17 million gross.
this business probably going to cost in the
For
millions.
well, it's 4 million.
Oh, well,
This
see, there you
situation,
go.
he's selling the situation for 4 million, 4.2 to be
Yeah,
exact.
so then buying the building is not a big deal at that point.
Yeah,
You're already
that's
paying 4 million.
But yeah, man, this is a big ass company, man. It has room for growth. It says here, but your boy
Now
got it.
remember, I just want to mention that it's not a
Mm,
crew of 16; it's 16 crews.
16
Big
crews, so
difference.
it's 75 people. My bad.
Yeah, big difference. Yeah.
16 crews, so it has 75. So let me do the math. 75 divided by 16 to figure out how much is in per crew. So it's 4 people in each crew of 16. So they're pretty much rocking and rolling and knocking things out. So that's literally how big of the crew is. Then another business. Let's see what's another business we're gonna psychoanalyze this profit gross versus profit versus land, all the McGillis. So we're gonna look at the 89,000 or $90,000 bagel company that's for sale. Triangle Bagel Shop. That's 90,000 with a 50,000 cash flow.
Is that a sole proprietorship? That's one of those businesses where the owner actually has to work. Sounds like.
Yeah, it sounds like that. It really does
Yeah.
sound like that 'cause it's reduced. The price is reduced. The gross revenue is 130,000. My bad, $230,000 a year. EBITDA isn't shown. Equipment furnishings is 35,000. Inventory is 2,000. The rent is 2,000. Okay, yes, it's a sole proprietor because he's still paying rent on this motherfucker. $2,318 a month. This bagel shop has never stopped making money through the pandemic. Why start from scratch when you can start with an established bagel shop and cafe, North Carolina Triangle Market? Cash flowing, premium location to the major public educational facilities, rapidly growing market, hmm. Like new equipment, 26,000 vehicles a day on the road in front of the business, premium food products, complete con- complete the contact seller box for automatic NDA to be able to check your inbox. Okay. Okay, all business reports is offered brief verbal screening. The owners of this bagel shop had started this franchise but pivoted before opening to go independent, resulting in the look and feel of a corporate location without the royalties and constraints of a franchise. They invested two up. Oh, okay, they've invested close to 200,000 in upfitting the space, purchased new kitchen equipment, and built a successful business that has weathered the pandemic profitably. But they don't want to run the business anymore. Hmm.
That's the key. See, like that's the thing about like some of these businesses where you have to have a genuine interest in bagels if you want to get into the bagel shop business. Number one, or bagel sandwich, whatever the heck they're doing over there. And then it's like you're kind of tied to that business. Like you got to be there to make sure everything goes smoothly. Like you maybe you want to take a vacation, you want to, or you just want to, you want to be abroad. Like somebody who wants to have like a nomadic lifestyle, or somebody who wants to, SYSBM, go to Brazil and DR and all that type of stuff in Philippines, and live abroad. You're not doing that with a business like this. You got to
Oh,
be
he's
there.
selling for health reasons. He's selling the situation, claiming health reasons. 2 weeks of training. Retail strip center on a busy highway. Currently busy is closed on Monday and only open from 8 a.m. to 1 p.m. Extending hours to a quick solution for more revenues. Additional catering opportunities is also available. So his reason for selling this thing is for health.
Yeah, and that's the thing. Like, what if you get the business and you have you get a health issue, or you get sick, it could be problematic. Like this is like a business where you got to be there. You
Yeah, you
know,
got to be there because it don't show no employees. That's the first thing that I know. They ain't show no police list. This is literally
well,
him
I mean,
operating the situation by himself, probably.
look at the hours. The hours are from 8 to 1, so these are limited hours. And so you have that advantage of having limited hours, but because it's not franchise, this is a small business. So your economies of scale are not going to be there. So like to increase revenue, if you open up different locations, then you can kind of implement economies of scale and start buying, stuff in bulk. And then you can kind of like, you know, implement managers that kind of manage the business for you. But that's something that's way down the line. It's gonna take a couple of years to get to that point. Um, but I mean, it depends. Like if you're into, you know, uh, food preparation and culinary arts, this may be in a job for you. And see, the upside is that, with these sandwich shops and stuff like that, anything you add avocado to anything, you just jack up the price. So you make an avocado bagel sandwich, and now you're charging the customers $2 more. The avocado itself costs $1.25, and then you slice the avocado so thin, you can you can one avocado will supply, 8 sandwiches. So you're making money hand over fist when you start, looking at things like that.
Yeah, because a boy is at the Triangle, and it's the price is reduced, but still, I'm gonna do some extra research on this because I got to figure out what can be done. Because a lot of this stuff I'm probably gonna have to sign incest anyway. But let's see what's going on in this, because this is Riley. Riley's situation gonna grow. Charlotte's gonna grow, but people that can't afford Charlotte, they're gonna go to Riley. Then whatever that's surrounding Riley is pretty much gonna benefit off of the crumbs. So this is 395 residential and commercial HVAC services.
You know what you really got to look at,
Mm.
especially depending on where you're at. Like, I don't know, Raleigh and Durham, but perhaps Charlotte would be a better fit for something like this. See, as
Indian rest.
cities
Whoa,
grow,
whoa, 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 whoa! Indian restaurant, $120,000 with a cash flow of 92. Wait a minute. Whoa, my guy. Whoa. Indian restaurant for sale, high traffic, college vicinity. Gross revenue 360. Furniture,
I'm gonna be I'm gonna be
expenditures,
honest.
equipment.
I'm I'm gonna be
Uh,
honest though. When you start talking about Indian restaurants and you see a cash flow of 92,000, this is no slight to Indians, but them Indians be working like 16-hour days, 7 days a week. So if you're making $92,000, but you have to work 16 days, 16-hour days, 7 days a week to get it, is it really 92,000 cash flow? Because when you divide it by the number of hours you work, you're damn near at minimum wage for. So yeah, that's something to think about.
yeah, definitely. 125, 55,000 in inventory. The rent is 3,100. Established in 1994. Well established Indian restaurant bar, North Carolina State University campus. Well known and established Indian restaurant and bar near North Carolina University campus. Non franchise. Low rent 3,100 a month. Long lease. Beer, wine, liquor license included.
Now, ooh, liquor license. That's where
That's the jig.
because now here's the thing. Now there's ways to increase revenue, but then you jeopardize your liquor license when you start like having after hours, and then there's like a imminent threat of some type of violence that could jeopardize your liquor license. You start getting like, a certain number of calls to your establishment because of, some type of altercation. Then they can, you can get your liquor license revoked. You have so many infractions, but uh, that's a good way to increase revenue. You have a liquor license, then you start, after the restaurants close, like maybe you start transition from a restaurant to like a night, night. I wouldn't say club because clubs invite a lot of violence, but like some type of bar lounge, and then you start transitioning your revenue from food to alcohol. And
Bingo.
alcohol is a lot easier because storage of alcohol is a lot easier. Food has to be stored at certain temperatures, it goes bad, but alcohol, that's a lot easier inventory to manage. You got to deal with stealing, obviously, though. A lot of times your bartenders are stealing alcohol from you, but you kind of calculate that into your business losses. But you can make a lot of revenue because the markup on alcohol is insane, easy to store. And then after hours, that's what people are looking for, alcohol. So
Beer, wine, and liquor license. Great location with high traffic count. Lots of new housing development. Okay. I'm gonna have to. I'm definitely gonna have to figure. Okay, so near. Let me write this down. Near. Damn, you're gonna make me have to bring out the sticky pad notes and shit. So whatever that's near the University of North Carolina State has development around that area due to the fact that there's an increasing market, more people coming there. So let me write this down. Let me write this down and read this at the same time. Okay, loyal customer base, plenty of dining area seating and full bar, beautiful outdoor patio seating, 100,000 in inventory, furniture, fixtures, and equipment, including asking price. Excellent opportunity for an individual looking to acquire a restaurant at the fraction of a build out cost. The lease expires in February 1st, 2029. 4 employees, including an asking price. Okay, fully equipped kitchen as per current codes. Walk-in cooler is a fixture. 10-door oven. Clover POS system and printers. Dining tables, chairs, booth prep, coolers, ice machine. Okay, dishwasher, 3 prep sinks, deep fryers, 6 burners, range, miscellaneous pots and lids in different facilities installed. Hood surveillance cameras, system buffet counters. Okay, I don't know why I started reading that shit slow. Okay, competition, no Indian restaurant in 5 mile radius. No other Indian restaurant in 5 mile radius. Okay, growth and expansion. Lots of growth potential by including fast food. Okay, fast food menu items. Owner is willing to stay for 3 months to train a new buyer. Reasons for selling: relocation.
hmm.
Relocation. That's literally the only reason that he claims that he's selling this joint. 4 employees. Lease ends in 2029. The University of Matter of fact, let me look at properties at near the University of. So we because it's talking about more development opportunities, so it's probably gonna be surrounding that area. Yeah, so it's probably surrounding that area due to the fact that you got a lot of influx of people coming there. So it's an opportunity. So I'm gonna have to research that area real quick to see if there's any properties for sale in that area. Uh, I need a I need a address so I can research the address. Where's the address? Fuck it, let me. Oh, wait a minute. Okay, well, shit, it even gave me a full address in that. So let me do this research. NYC University campus houses nearby for sale. For sale. Let's look at let's look at realtor.com to be able to figure out what are these 389, 460, 365. What else? What else? Oh man, this is 579. shit. Let's see what this. Oh, contingent. This one is contingent. This one is contingent. This one is contingent, and that one is contingent. So all four of these joints right here is contingent.
What? How big is the lot on that house? It looked like it got a big lot.
0.32 acre lot,
It's a decent
1,500
sized lot.
square feet.
Mature trees and
This is the houses close to where the university is at. So these. Do this real quick. Kitchen, living room, inner kitchen.
so yeah, I guess the question then becomes just like what's the value add? Like are you trying to fix and flip, buy and hold, rent out? What are you trying to do with
Definitely,
this
this is a
property?
buy and hold. I would do a buy and hold situation on this
Well,
one.
even with a buy and
Buy and
hold,
hold and rent.
yeah, even with a buy and hold and rent, um, it's like what are the rental revenues for that area, and how does that relate to the asking price? I'm not sure because the house itself looks to be in rather decent condition. It doesn't look like it's a rehab property, by any stretch of the imagination. So where then does your value add come in? Could you potentially get a similar house for significantly cheaper that needs some elbow grease um to get it up to the market standard? That would be where your value is derived from, a house that you have to kind of fix some things, maybe replace some items in the kitchen and bathrooms, maybe do some floor work
It's outdoor. This got a lot of outdoor.
so how does that translate, you know, for your ability to generate revenue, if unless you're going to add an additional structure, on that, open space, that space really doesn't do you any good per se. I mean, how much more appealing does it make to a potential renter? Because I think, most renters really don't care. And then that's just more of a headache for you to maintain because, unless you have that specifically in the rental agreement that the renter is going to maintain the outside and, mow the lawn and all that type of stuff. And, but even still, it's like, I don't know. I think it's, I don't know. Like I would look at and see like find out where the bottom is. Like I would look in and see what I like to do is I like to like really narrow down to a specific area. Um and then once I've narrowed down like try to go like to like maybe a couple neighborhoods, a 1 mile radius. Then look in that area, then sort from lowest to highest price. So you find out where the bottom is and where the top is. And then that's where you determine like where you want to come in as far as, you know, what type of properties as far as expenses are concerned. What are you looking for? Because if I look in an area and I see the most expensive houses in the area are, let's just say, $500,000. The cheapest houses in the area are, 225, and I find a property that's 450. Well, there's not a whole lot of value add room at 450 asking price for a home. But see, I wouldn't know that unless I've actually done the due diligence of finding out what the bottom is and what the top is for that specific location.
Okay. Okay. Most definitely. Because now this one I like the most. Visually 389. This is way bigger. Not way bigger, but 500 square foot bigger plus more bigger when it comes to the acre lot. This is 389 for bedroom, 3 bath,
How many bedrooms?
4 bed, 3 bath.
That's some nice metrics right there. A 4-3 is gold.
This is the front look. Inside the interior. Hold on, let me charge my laptop real quick. This one I would see. This is definitely going to be a buy and hold and rent. Buy, hold and rent. Pretty much, he's going to be buy and hold and rent because really, I don't see what else I can possibly do when it comes to a value add situation. That's why I would probably do off market leads. Like I would do this area saying we buy houses and try to do a situation where I could try to find something that's probably 70, 80,000, assign it to a developer, or pretty much just buy and hold for
Whoa, whoa,
myself.
whoa. You said you trying to find a house for 70, 80K?
Off of the we buy houses type model method, man. Literally the marketing method. That's literally the off market basis.
Well,
We
I mean,
buy.
like,
Mhm.
I mean, okay. Then this house is how much?
No, not and try to find something in this area, man. Not we ain't gonna do for this house specifically. This is three eighty
No, no,
nine.
no, no. That's what I'm saying. Because if how much is that house?
This is 389 situation, big homie. This is
Okay, so you got
389.
a three. So you think that you could find a house in that area for 70, 80K?
It doesn't hurt to try. It does not hurt to try, man. We
I
don't.
mean, I mean that's like a house that was fire damage, for 70, 80K, structural damage, maybe needs foundation work. They got issues with, the septic tank and asbestos remediation. That's what you're gonna find for 70, 80K. You're gonna have to put some big dollars in the,
Wait a minute.
property
Is this a
like that.
treehouse?
Huh?
Man, this is a treehouse. Yeah, this is literally in the backyard. Okay, this is the start of the backyard. Treehouse with the play park area. This is inside of the treehouse. Floor plans.
Now see, I like that. I like a listing that has floor plans in it. Because it really gives you an idea of what you're working with as far as the house is
Okay,
concerned.
so the patio up north, storage area, carport, your porch area, 1 bedroom on, well, 2 bedrooms on the right, your living room, your dining room, kitchen, bath. Then your master bedroom is inside in the core. Then the bedroom, the family room setup, patio. Matter of fact,
Oh, so the master bedroom is upstairs, basically.
yes,
The
sir.
family rooms, yeah. Let me see now. Let me look at that bedroom. But see, wait, hold up, wait. That's not a wait. Go. Scroll back down. Let me look at the first floor. Look at the first floor. Oh, so the master bedroom is downstairs. Actually, yeah, the master bedroom is downstairs.
Yeah, because this is pretty much the floor plan. Uh, these are the floor plans. That's the outside of the look of the house.
How many
389,
square feet?
2,000, 2,000 square feet. This is
That's a decent.
2,000.
That's a decent sized house. It's a decent sized house. It's a decent sized house. Yeah.
So we can scroll up. That's the bathroom. Now this area look kind of big. So these pretty much just the rooms right here. So So yeah, 389. I'm trying to be able to figure out what can I get in this area for the low low. I'm literally using this as a comp. If I can find something at 70, 80,000, 120 area, I need to find something. I need to find something. Something has to be dilapidated where it's an ugly house in a beautiful neighborhood. Something has to be.
Okay, so at 70, 80K, what's your renovation budget?
Renovation budget has to be around 50. Cause I know somebody locally that if I had a property, he would be able to give me a $50,000 type of loan when it comes to fixing some shit up. So if I
I
tell him
just
about,
I just don't see a property in that area with homes going for three plus. I just don't see getting a property uh
let me
for
look at the
70,
tax lien
80K.
situation. I'm researching my iPhone on what's the tax lien situation. How
Okay, now that's a
tax lien or
possibility.
tax deed? Because it has to be a scenario like this, homie. I ain't just giving up on this area. I'm
So now you're talking tax lien. Yeah, okay, now I can see
tax.
that.
Is this a tax lien or a tax deed state? I mean,
Yeah, I can see that situation then. So, are you coming with 70, 80K cash? How you gonna finagle that tax lien situation? Do you have to have the cash, or how does that work?
well, I'll have the cash due to the fact that I'll just use my whole e-commerce shit out. I would literally have to be able to leverage all the stuff from my gross from my e-commerce stores to be able to come up with the 70, 80, and I can get the loan for 50,000 from somebody outside with a good interest rate and a grace period.
Hmm.
With the grace period involved. So let's look at the other properties because there's a couple more. Okay, now this one is 500, and that's 3,500 square feet, and
Wait,
this one
so
right
so
here. Mm,
you're basically you're trying to leverage. So you said 70, 80K. You're leveraging 30K then, right?
yes,
And then you're getting 50 hard money.
yes, sir.
Where's the renovation budget coming from?
Renovation budget will be coming from the loan that I get from Odoo. That's literally pretty much going to be my construction. That literally be my construction renovation shit.
Okay, so you're
Mm,
getting so 30 out of your 30 out of pocket,
mm-hmm.
50 hard money, and then another 50 hard money for renos.
Yes,
So 100 total.
130.
No,
So mm,
but I mean, but 100 total that you're actually borrowing.
yes, 100 total, and 130 including my money to be able to find something where I can get build and flick something that like this, man. I need some high equities at the 500,000 area. I need something
Okay,
500,000, 400,000,
okay,
$375 at lowest.
let's do the math real quick and figure out what you would need to make that work. 30K out of pocket, right? 50 hard money, 50 construction loan. Let's just say that you closed. Let's just say that you closed on March the 1st, right?
Mm,
March the 1st, you take possession of the property. You're out of 30K. You're 50 in the hole, hard money. You're 50 in the hole, construction loan. When do you start making payments on the loans that you have?
Now, with the guys I know personally, he has a 1 year grace period, which I thought that was like, huh,
Very generous.
very generous. But I know him for like 7 years. I've been knowing him for a long ass time. That's like 1 year grace period where he give me the first year to be able to see what I can do and let me do my thing.
Now,
Now,
is
when it
that the
comes to
hard money or
construction,
construction loan?
that's the hard money. That's the hard money.
Okay. Okay. So the 1 year grace period. So so March 1st, 2022 is where your hard money payments begin. And what will the hard payment be monthly?
Repeat that again.
What would your payment be monthly starting March the 1st of 2022?
750. No, not 750. 850. 850.
$850 a month for 50K. Okay, and then what at the term end, how much would you be in the hole for that 50K loan?
Now that I'm gonna have to do some more extensive research because this is I'm literally doing three or four or five things, but 850 a month. Now, how much you're saying the servicing? Is it me? You're talking about me servicing that debt within a time period of 4 to 5
Yeah,
years.
yeah.
So that'd
So
be like a 6 year with really it's 6 years, but 1 year off, so it's really five. Because he said that it's a grace period of 1 year. I looked at the terms and it was actually kind of favorable. So with that being said, it's going to be an interest. I want to see if it's a balloon. Does it have a interest balloon? But I'm gonna have to do some more research on that because I got to figure out the details. Because I'm literally taking 30 of my money, 50 for the hard money, 50 for the construction to be able to make sure that the shit can get built necessary, so I can at least I would at least have to see myself around 2,000 a month combined with the hard money and the construction loan payments.
okay, and then how much are you expecting to get rental revenue from that property?
I want to be able to charge 2,500. I want to charge 2,500 because these mortgages right here is 2K minus the taxes. That's literally
Okay,
minus the
so
tax, and not in counting the taxes. So 2,500 wouldn't be far off reach.
you got 2,500 a month coming in, 22,000 going out, in construction loans and hard money loans, correct?
Yes, it's netting me
Okay,
around 300. It's
okay.
literally
Well,
netting me around 300 times
oh,
12. That's 36.
property tax. Because even if you buy the house cash, you still that there's still that little issue of property tax that you got to pay every month,
Yeah, that's true. Let me
right? Property tax,
Man,
right?
let me see this tax rate, man. Let me see the tax rate when it comes to
the tenant's gonna pay the electricity, right?
yes.
Um, with water, sewer, rubbish, you're gonna pay for that as the owner. Um, and then property tax as well. So that's really gonna eat into your profit, and then you got to set aside money for maintenance. This is not a brand new house, so there's inevitably going to be things that need to be fixed. Um, and as those things arise, you need to have allocated some money monthly to kind of cover that. So you're actually going to be net even when you really think about it. After all that's considered, renting for 2,500 a month, you're going to be net even. Then you got to also account for vacancies. When you once you while you're renovating that house, the construction loan that you got to renovate the house, that house is vacant. You're not generating revenue. Then you have to list the home, um, and then get a tenant in. Now, luckily, when you're talking about a rental home, especially of that size of 4.3, that's going to be typically a long term tenant. Like that's somebody's going to be there 12, 15 years, maybe even longer. You ain't got to worry about having to replace a tenant every year. So that's the benefit to that.
Yeah,
But
man.
at any,
Mhm.
at any rate, though, I gotta head up out of here because I gotta get some rest. I gotta work tonight. So it was nice chopping it up with you.
All right, no
Um,
issue, man. You always got a welcome spot, man.
yeah, I was glad I caught you, man, because I don't always get the chance to catch you because of my schedule. But yeah, we can definitely chop it up again next time you're on, man.
All right, for sure, G. Respect to you, man.
All right, appreciate it. Shout out to everybody in the live chat. Peace.
Peace. Okay. Okay. So wacky. In NC tax deed where you get the property in full after 15 days. Okay. Because I was trying to figure out is it a tax deed or lien, but okay, deed state. Okay. If anybody wants to come up and hop on. Probably gonna do this for a couple more minutes, but yeah, I'm about to do some more research when it comes to the NYC market, not the NYC, not NYC market, the NC market. I don't know. Oh man, I don't know why I keep mixing up things, but tax tax deed. Okay. Definitely gonna have to do more reconnaissance when it comes to this area. But let's get more properties on this. Look at more property. Yeah, this is the 260 joint. I'm gonna save this one. I'm biased towards that house. It's 260. I'm gonna copy and paste that link in the chat. So if anybody wants to see it, visualize it, and try to do the numbers themselves, they can. They can. It's literally 260, and I put the link in the chat if anybody wants to come up. I put the link in the chat, so if anybody wants to see and analyze the property themselves, they can be able to analyze that property themselves. That's 260 joint, multiple bedrooms, multiple bath. I think it's undervalued too. I think it's really undervalued. Whack. Like, what's going on?
Yeah, what's going on, man? What's up? Yeah.
Respect to you, man.
Yeah, double honors to you, brother. Yeah. But yeah, like I said in the chat, in North Carolina, yeah, it's a tax deed state where the redemption period is only 15 days. Yeah. So if you buy a tax deed in North Carolina, the owners have 15 days to redeem their property, or else after those 15 days, if the owners don't pay up to redeem the property is yours. So
Free and clear.
Say that again. I'm sorry.
Fully free and clear.
Fully clear, free and clear, fully free and
Fully
clear.
free and clear. Whew.
Yeah.
15 days. See, now in New Jersey, it's 2 years.
Yeah, in New Jersey, it's 2 years. Yeah, that's why that's why a lot of investors within the past couple of years are heavily invested in North Carolina because of the short redemption period when it comes to buying tax deeds in NC. Yeah.
Okay, when you don't pay your property tax in North Carolina, the taxing authority can foreclose your home and sell it to a new owner and do however get the opportunity to prevent the loss of your property. Okay, these are the questions.
Yeah. You know. Repeat that again. I'm sorry.
No, I was just reading the question because I'm just getting familiarized when it comes to the North Carolina due to the fact we saw those were properties around the university. So the properties I just showed in the business, the Indian business right here, in business, literally at the business. So it's $125,000 asking price for the $92,000 net cash flow. The cost is $360, and that's literally inside the campus. I have to figure out, do I need a manager? Or it has 4 employees. Employees, the owner's pretty much retiring. No, relocate. That's why he's selling that situation. You want to relocate out of that.
Yeah. Real deal. You're Borgen. Can you hear me?
Oh.
Yeah, you're Borgen.
Yeah, I can hear you. Damn, right when the game is being applied, shit. This is actually going to start fucking well.
Oh well. Yeah, he'll be back. He'll be back, people. Yeah. Yo. I don't know. It's funny. Whenever me and Real Deal gets to talking, he starts walking. That's funny, man.
Okay. And I put another property that we was looking at. Yeah. Yeah. Am I still Borgen? I'm still Borgen.
Oh no, you sound perfect now. You're clear.
For sure, for sure. Now I can share my screen. We can analyze these things. Now, have you been to North Carolina as a New Yorker yourself? As a proud New Yorker yourself, I noticed.
No, I haven't. Well, I've driven past North Carolina. That
Okay,
that's the most I can tell you. I've driven past there, nah, but I haven't really sat back and visit North Carolina yet. I will though.
okay.
The information I know about North Carolina, I will pretty soon.
Yeah,
But
'cause this
no,
is 320. This is 320 situation right here. This is South Point Street, and I think this is a townhouse to be honest, because it got a number on it. But if this is a townhouse, this is a big ass townhouse type home. I think it's a townhouse. The way how it has that number, they only do that for like townhouses or something. So like that. Let's look at Durham.
yeah, that's a townhouse. Yeah,
That's a townhouse situation. Shit's so motherfucking big and everything. You expect that shit to
yeah,
be a house.
yeah.
'Cause here in California,
That's a good
yeah,
price.
townhouse
Three
situation.
twenty for that.
Yeah,
Yeah,
320.
it's a good
320.
price.
Other houses, other houses like I saw the house in VA. That would be like 750 in VA. VA, like you said, a lot of investors going into buying up stuff, fixing and flipping, uh, equity scavenger hunt. They doing all these type of methods. Now this one is 709 Oxfordshire Lane, Durham. Okay. 1602 Medston Drive, Durham. 350, 5 bedroom, 2 5 bath.
Yeah, but now you sound
Number
choppy
is
again, man. Yeah.
uh damn. They don't want me to give this game this good Tuesday, man. This is crack, man. In chat,
Dang, five beds, 2 bath for 320. That's a good price. 350. Okay,
350,
350.
and you could probably get it for 320. You could probably get it for 320.
Right. Yeah.
Built in 1998. Built in 1998. Lot size 0.47 acre. Okay, so this is newly listed 350. Let's look inside the house. Level up with the 5 bedroom house, including a separate study, flex room, and oh so many closets. Okay, with an abundance of natural lighting, gas fireplace, because up to the home or soul and completely fenced yard. And car garage, a massive, what is this? A massive flat driveway. What else you could need in 2021? Okay, how about a train HVAC HEPA UV antiviral scrubber? Nearly half an acre. A new 7 foot, no, a new roof, oversized primary bedroom retreat, living area, walk-in closet. Let's look inside. Inside this is, yeah, this is definitely 350. Okay.
It's nice, man. Pretty nice inside. Huh?
Yeah, definitely would be a buy, hold, and rent. Definitely try to
Yeah.
rent this out for 25 to 28. It's the deck
Definitely rent material.
out for
Oh, the
yes,
backyard too. The backyard is nice.
yes. So this is literally the whole thing. In chat as well. In fact, I'm sending this to my iPhone. Okay. Now I'm gonna put that in
Yeah,
the link as well. Now that's a fat crib right there.
yeah, that's a nice crib. Yeah, that's. But yo, real deal. I'm gonna have to go. Yeah, because I got
Yeah,
some stuff to
I'm
do.
about to drop out too. I'm about to
Yeah,
drop out too, man. That's been a pleasure, dog. Respect to you, Wacky.
yo, respect to you too. You know, I was sitting there listening while you and Super Truth was talking. Y'all was giving some good information, man. Keep up the good work, real deal. You know, people are
Hey, thank you
listening.
for believing in me, G.
Uh,
Thank you for believing
no
in me, G,
problem.
man.
No
All right, man.
problem.
Now
All right.
respect everybody in the chat. RDF out.